It's been a phenomenal year. I have been around the financial industry for 30 years, and both working in the industry and now as a journalist. And I can never remember a year like this one. We're up about 19% on the Dow Jones Industrial Average in 6 months. That's a great year. We could stop right now and I wouldn't complain. If they just said, hey, we're going to take the next 6 months off, we're going to close the markets down, we're not going to do anything, I'd be a happy camper because it's been a great year. I think we're not done. I think we're going to continue to do well. But it's amazing how many people still don't believe, number one, in the stock market, and number two, are grasping for higher rates of return on their investments. So I hate to give you a lot of numbers, but I want to go through a few things that are just kind of interest. The folks at Standard & Poor's, when we hit the new all-time high last week, put out a report about, well, first of all, July is historically a pretty good month for investing. But they put out a year-by-year breakdown of how the S&P 500 and the Dow Jones Industrial Average, but we'll just deal with the S&P 500 here, have performed on a year-by-year basis and where the markets stand. And I thought, well, let's take a look back. Let's do a little homework here, a little history here. And so I went back to the year 1993. I thought, well, let's do this in tens, okay? In 1993, the S&P 500 was at 448. 448. In 2003, 10 years later, the S&P 500 was at 990. So it basically doubled in 10 years. That's great. That's a really good rate of return. So it was 2003, 990, and today the S&P 500 is at 1,680. So it has been a powerful, continuous climb for the S&P 500. And you think about what has happened between 1983 and 2013. Well, I can count at least 3 really bad recessions. 82, 83 was, many people think that was one of the worst recessions our country's ever had. I remember the early 1990s recession was, I thought, more devastating here in San Diego when we lost the aerospace and defense industries. I thought, boy, that was uncomfortable. That was painful. It drove real estate prices really down, worse than I think what we've been through here. And there have been some others. No, those two are big memory makers, but there have been other recessions along the way. What else happened? Anybody else think of anything that happened between 83 and 2013? Probably the biggest economic disaster in the history of this country. 9/11, the terrorist attacks of September 11th, 2001. That was a terror attack, and it was an economic terror attack. That's why they hit where they hit. And I'll talk more about that a little bit later on. But that set our economy back so far for so long. And in many ways today, we're still struggling from the economic damage that was done then. So despite all of that, the stock market has kept moving higher in here. And that's pretty impressive stuff to me. I want to, and the other thing I don't do is a lot of reading to people, but I want to read something to you that I thought was really very clever. There's a guy by the name of Mark Mobius who works for Franklin Templeton, and he is one of the probably 10 top investment professionals in the United States right now. And I saw this article on their website that I thought was kind of interesting, and it says, the best time to invest. The best time to invest. So let me just read you a couple real quick paragraphs from this article because I thought it was pretty neat. He says, I frequently speak at investment conferences around the world and get questions ranging from my outlook for a particular market to highly sophisticated investment concepts. One seemingly simple question asked by a young lady years ago at a conference in Canada, which I attended, with the founder of Templeton Investments, the late Sir John Templeton, was particularly timeless. She asked, I've just inherited some money from my grandfather. When is the best time for me to invest it? Okay. Sir John was at the podium and after a brief pause gave an equally simple answer. Young lady, the best time to invest is when you have money. Okay. Judging by the laughs, the crowd and I appreciated his response, but I was intrigued about what he meant on a deeper level, so I did some research. Real quick here. After conducting some historical market studies, I found 2 important emerging stock market trends. Historically, bull markets have gone up more in percentage terms than bear markets have gone down. And bull markets have lasted longer than bear markets. So if you dollar cost average, meaning you systematically invest the same amount each month or each quarter over a number of years, you would have found that over the long term, you were in a bull market more than you were in a bear market. And while past performance is not indicative of future results, historical studies show that in percentage terms, the bull markets have grown more than the bear markets have declined. In addition, if you have the discipline to continue adding funds during these bear market cycles, that same amount of money would have bought you more stocks. So I thought that was about as perfect an explanation of why you should invest and when you should invest. You never really know what's going to happen tomorrow. You never pick up the Wall Street Journal and the front page headline says, "Rally starts tomorrow." Okay? You don't get that break. So you've got to decide, are you going to be in the game or out of the game? Maybe you shouldn't always be 100% in the game. Maybe you should never be 100% out of the game. Wayne Gretzky said, "You never score a goal if you don't take a shot." Okay? And so that's kind of the way I approach investing. Now, I'm a little bit different probably than most people my age. I'm 100% in the game. That's just the life that I have. That's the way I approach investing. That's the confidence I have. And so I'm 100% in. But I would doubt that many of you probably are that way, unless you're in your 30s or 40s and you have no excuse for not being 100% in the game. You really don't, okay? You've got the best friend any investor could ever have working for you. That's time, okay? It's not timing that makes for great investments. It's time that makes for successful investing. So you kind of have to decide how you do that. Now, with that said, I realize that no two people in this room have the same tolerance for risk. Everybody's a little bit different, and so you have to decide what's right for you. But in the world we live in today with very, very low interest rates and probably not any significant increase in interest rates anytime soon, you've got to decide what to do.